What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, I'm making this video update because a lot of you, specifically over on Twitter, have been reaching out to me, asking me what is going on. It's been, I think, about a couple weeks since we've made an update on Bitcoin and the markets, and the reality is, you know, if we just kind of have a look at the charts right here, really it's just been a lot of the same thing. The one thing that has a lot of people worried, obviously, is that we've fallen out of this range. We were having an accumulation range between sort of 61,000 and 72-ish thousand, and now there's the fears that is this distribution because now we've fallen lower. In fact, Bitcoin got down to about $53,000. Now, as you can see right here, if we do actually just follow this parallel trend, we are actually sitting at the bottom of that larger trend. So that does suggest still that we do have higher lows and, well, not yet potentially higher highs, but of course there is that panic. Now, there's a few things that we did say, and before I get into the charts, I wanted to go over just a few sort of fundamental things that are happening right now. Number one is, as I said, the summertime is typically a very boring time for Bitcoin. If you go back in the charts historically, I've showed you sometimes summers get boring. Now, what are the reasons for this? Well, it could just simply be because, you know, a lot of people are enjoying the nice weather. They're going on vacation. I mean, who really knows? But at the end of the day, we know that Bitcoin tends to be a little bit boring around these times, right? So that's number one. But then again, the big question is, why are we having the stocks continue to move to the upside while Bitcoin is moving to the downside, or at least just simply going sideways? So I want to kind of like ease your mind today and explain to you exactly what I'm doing, what I see going on in the charts. Obviously, we are still Team Bitcoin over here, as you guys can tell. And it's not a perma bull approach. I mean, it's understandable that some of these people, maybe that have been holding since 3,000, 8,000, 10,000, 16,000, yeah, maybe they do want to take some profits. Maybe they're taking some of those profits and they're going on these vacations, or maybe they're buying, you know, they put some money down on their house, or they want to buy a car or something like that. I mean, who knows why people are taking profits, but nevertheless, there clearly has been some profit taking. Now, something else that's important to remember is that the ETFs did launch about 5-ish months ago, and we talked about how a lot of these bigger players aren't going to jump right in, right? They're going to kind of wait, and we had sort of a 6-month outlook to probably when a lot of these institutions want to see the sort of track record, right? So they can go to their clients and say, hey, you know, now that we have about 6 months, which is a pretty good amount of data, now we start to feel comfortable to allocate to this particular asset class, and then the doors could open, right? So I want to kind of talk about the pros, the cons. There are some things that in the chart is a little interesting. Now, we know that this entire bull run has been very different from the previous, right? We fell below the 200, for example, on the moving averages. We've never seen that before on the weekly, right? So that was new. So that was kind of a negative. But on the flip side, on the positive, we had also seen the highest price for Bitcoin ever leading into the halving. In fact, Bitcoin put in a new high before the halving. That's something we've never seen before either. So obviously, take everything with a grain of salt, but we can't deny that, I hate throwing this term around, but it is a little bit different this time, right? We're seeing things that are different, and there is something on the chart that I do want to talk about that is, I guess you could say, alarming, maybe, different, but not exactly something that I would be worried about. So let me first dive into the fundamentals. It's going to be a lot of talking today, so sit down. We're going to have a nice little chit chat. Oh, friendly reminder though, guys, the prices have obviously fallen, and we have sold out the first 1,000 NFTs over on Metasignals. There's 987 remaining at 1.7 ETH. With the price of ETH actually being down, it could just potentially be a good opportunity if you've been waiting to scoop up that NFT over on Metasignals, which obviously is a trading alert system if you're not aware of that. And yeah, you could join the free Discord. You could sign up if you guys want. But, you know, ultimately, what are a few things that are holding us back? Well, I already mentioned summer. We know, I mean, I'm not going to be a broken record about this. We have the fears about what's been going on with Mt. Gox, right? They are distributing, you know, after it's been about a decade. I mean, these people that have been waiting to get their money back, they're finally going to get paid. And the question is, you know, since they've been waiting so long to receive this money back, you know, if they do receive some of it in Bitcoin, you know, are they going to just say, you know what? I've been waiting 10 years for this. Screw this. I'm getting out. Well, I mean, there is that possibility. There's also the possibility that if you think about it, a lot of these people were probably pretty diehard, or at least they got in very early. Maybe they have higher conviction. So again, I wouldn't suggest that all of that, you know, would be attributed to 100% sell pressure. But again, every time we've had this Mt. Gox situation arise, we tend to see a dip in price, right? So that could be one catalyst. The other definite catalyst, obvious catalyst, is the German government, which seized, I don't remember the number of Bitcoin, but it was a lot of Bitcoin that they had seized. They've been selling. So that's been adding to the pressure. Now, there's good news and bad news. The bad news is that they're only about around 50%, I'd say, finished with their selling. The good news is that Bitcoin has actually held up quite well, considering the fear and that sell pressure, right? So that is something else to consider. We have recently seen that the ETFs have actually had inflows starting to go into the positive again, right? So this is showing that maybe what happened was we had those early birds that got into the ETFs, right? They saw the price go from 45 to 73, 74 on some exchanges, and maybe some of them said to themselves, hey, that was a pretty good profit. Let me take some profit. Or, for example, as I said earlier, a lot of the institutional players that have been waiting, you know, for a little bit longer, for that 6-month sort of data, for that track record, maybe some of those people who have been on the sidelines, they've been saying, I'm waiting for a dip. Well, this is the dip that they could potentially have been waiting for, right? Bitcoin is synonymous with 30% drawdowns, right? And by the way, we haven't even hit 30% yet. So again, you know, the blood in the streets, the fear, and yet still we haven't even hit the 30% drawdowns that we had all in the previous 2 cycles, right? So again, it seems scary. It's because you're going through it live, but really in hindsight, we can only print one daily candle at a time. So you have to be patient. You know, once we get more data on the chart, now you have weeklies, monthlies, right? Quarterly charts. Now you can start to paint a picture. Looking at Bitcoin on the daily, it's kind of a waste of time, you know, just to kind of put it out in that perspective. So obviously, you know, some of the big culprits we've already named. Now, I believe that also another thing that we have coming is this is something not a lot of people are talking about, but the FTX payout, right? That is somewhere in the 16 billions of dollars. So there's been a lot of people who got caught up in this FTX debacle. They've been waiting for their funds. Now, FTX obviously put a very big damper on the crypto space as a whole. Granted, it had nothing to do with Bitcoin or the blockchain. It had specifically to do with bad actors, with SBF, FTX, and what they were doing in the background with centralized exchanges, centralized money that they should not have been doing on behalf of their customers, but they were, right? So now that 16 billion is going to be distributed. Now, the unfortunate part about that is that money is going to be distributed back in cash, right? So they're not going to be getting back their Bitcoin and their crypto. So this asks the question, what are these people going to be doing? Maybe some of them are just going to be so burnt, so freaked out of this whole crypto space, they had such a bad taste in their mouth that they're just going to take the cash and they're going to run. And that's it, and we're never going to see that again. And that's fine. That's understandable. But you have to also realize that the people that were getting into FTX back then, yes, of course, towards the end, there was a lot of the Tom Bradys and the celebrities, but originally, it was a lot of people that were already in the crypto space. They heard about this new exchange, FTX. They moved their funds there. They were trading. So I would suggest that a good portion, I mean, let's just be totally even here and say about 50% of that money is probably going to go back into crypto, right? Because now that crypto is starting to get more clarity, the space has been cleaning up a lot of these bad actors. I think we're going to see some of those funds flow back into Bitcoin. But here's the big one. And this is something that has been on my mind. I've alluded to it in a lot of previous videos, but I want to lay out sort of the unfortunate truth of the Bitcoin space at the current moment. And that is that, yes, we are a little bit dependent on the newer inflows of the new capital, because the new money that's coming in from these, hedge funds, institutional players, family offices, or just high net worth individuals who have never trusted the crypto space, but now have a safe vehicle like the ETFs, they've been sort of, waiting to feel these waters out. But the money that's already been in crypto, right? The people who've been in since 2017, 2018, or even before that, what have you been noticing? you saw the meme coin season, right? Meme coins going absolutely crazy. Now, when I first got into crypto, there were maybe 300 altcoins to pick from, right? A lot of them focusing on layer ones and sort of solutions to the blockchain space. And then we had the ICO 2.0 craze, which kind of came out in the previous cycle. And that's when you saw the amount of altcoins being raised specifically for capital for these projects skyrocket. So we went from around 300 altcoins to like 4,000, 5,000, 6,000 altcoins. And while the gains were good, some of them did very well, but it really never matched up to what we saw in 2017. And fast forward to today, what I think is that a lot of people have lost trust in these so-called VC, venture capitalist-backed coins, right? They know that what ends up happening is these guys get allocations early to a lot of these projects. They end up sitting on these massive vesting schedules, these massive bags, and what ends up happening is, and it's not necessarily that they're scams or they're nefarious, it's just that they're sitting on it for a long period of time, and once these lockups start to unfold, you start to see massive dumping. And unfortunately, this dumping tends to happen on those who come in later, i.e. the retail players that buy secondary on the exchanges. So there's been a lot of mistrust when it comes to these VC-backed coins. I don't want to name any names because I'm not throwing shade at any particular, VCs, but it used to be where, a big name would back something. And you might know some of these names, I'm sure. And everyone would FOMO into it because these guys are putting their money where their mouth is. They're putting their name on these projects. Now, it's like when you see the big names on the projects, you actually back up and go the other way and say, hey, wait, I know what happens here. There's going to be massive unlocks and massive dumping that's going to happen over the course of a year, 2 years, whatever the lockup period is, right? That's sort of part one of the equation, which is why I believe you're seeing a lot of people move into the meme coin space, right? Because they're like, hey, well, these are fair distribution. There's no big VCs backing it. A lot of them are 100% unlocked from day one. So this is good, right? They create community, it's fair distribution, no one's going to dump on us, except here's the issue. A lot of the people that are buying these meme coins are the same individuals who were in the space potentially through the last cycle or maybe the last 2 cycles who are just recycling that money. Where is that money coming from? Well, a lot of it is coming from people who were, let's say, holding Bitcoin or holding Ethereum. So if they want to get money, they're not having new money come into the system. So they're selling their Bitcoin, they're selling their Ethereum to then buy into these meme coins, right? And what's happening is it's this rinse and repeat, but ultimately what it's doing is eroding from that capital that would be going into Bitcoin. Now, I think at some point, we might see an end to this, although I kind of have this feeling that with human fear and greed, it's never going to end, because no matter how many times you get burned, really what it is gambling, right? And if you don't realize that when you're buying these altcoins, yes, of course, I could tell you tons of altcoins I've bought, and maybe 90% of them lost 99% of their value, and 10% of them might have did a 2 or a 3x. But yes, I have been part of those gems that have done the 100x, right? That have done the 1000x. I have been a part of that, but I will tell you they are not that common. And obviously, you're going to hear all the stories about the people who made the money. You're never going to hear the stories about the people who lost the money. But at the end of the day, most people are speculating, they're gambling. These tokens have no utility. They are just funny memes. And what ends up happening is they build these communities, people end up being bag holders, and a lot of those coins never get back to their all-time high. And then subsequently, those people who sold their Bitcoin are now sitting in these altcoin bags, hoping for the moon. And what's happening is now you're opening up the door for these bigger players to come in and buy that cheap Bitcoin. And then eventually, once that Bitcoin price moves, 2x, 3x, whatever, now you just wish you had held that Bitcoin, right? But what we're not having right now is the massive inflows attributed to all the things that I just said. Now, do I think that the bull run is over? My opinion, not that it matters, but based on some of the charts that I'm going to be showing you guys soon, No, I do not think it's over. So this is why, let me hop in super quick. And again, you know, I don't want to make a video every single day to go over the same exact thing. I just believe we're just in a range. We're dealing with these issues with, you know, FTX repayment, Mt. Gox repayment, the German, you know, company selling. Also the fact that we had a run up way too quick. We had an all-time high before the halving. We've never seen that before. But if you just step back and you look at history and you realize where we could be in this cycle, Bitcoin's actually doing what it always does. Okay, so let me just dive in and show you kind of like the pros and the cons of what's going on. Obviously, falling out of this range, not too great, right? Now we have this massive area, which I do believe at some point in the future will become support, but ultimately right now, you can see it's acting as resistance. So really our short-term goal is to try to get Bitcoin to sort of get above, you know, this sort of 61,000 area and hold up there again. But the question is, how long could we continue? Well, if we have a look at simple Fibonacci retracement, we haven't even gotten to the 0.382. I guess it depends on which chart you're using. I'm just using Bitfinex for an example. They're all about the same, but you know, the one thing you can notice is that we are below this 21 exponential, whereas before it was acting as support. But again, you know, if we come back down to this area and pay close attention to this cluster, because it is something we're going to sort of go over again on the weekly, you could see that we are above all of the major moving averages, the 100, the 200, and the 50, also looking for an eventual bullish cross or a golden cross on this lower or higher time moving averages. But yeah, on the lower time, the 21 exponential, we have fallen below. But we've fallen below it before. You can see right here from August 14th to the week of October 16th, and these are all weekly candles, so 1, 2, 3, 4, 5, 6, 7, 8, almost 2 months, you know, we held under this area. So that's again sitting right around the 0.23, which is around 60,000, which actually lines up perfectly with our 61,000 area. So it wouldn't be impossible to see Bitcoin bounce in this range for, you know, 2 weeks as we have done before breaking to the upside. You know, all these other moving averages, they are slowly moving to the upside, right? So we're still in that constructive pattern for Bitcoin. Now, the one thing that you could say, which is a little bit upsetting, is falling and holding within the EMA ribbon. The last time that we fell and held inside of it was back here where Bitcoin had the double top and we fell about 50%. Now, do I think we're going to fall 50% this time? I actually don't, because I think that the volatility is not going to be as intense as it was before with the introduction of the ETFs. And if you actually have a look, you know, from that 50% drawdown, we did have a 138% pump back to the top. Now, keep in mind, this took quite a long time, right? From the absolute bottom to the absolute top was about 140 days. And if we come over here, we can see that the bottom of this range is again sitting around that 50,000 area. So once again, history is repeating, not exactly, rhyming somewhat, but this has been a very different cycle, right? Very different cycle than we have seen before. If we move over here, just some simple projections, as we could see, this long-term bottom has been holding quite well in this sort of ascending pattern. You could say that maybe this was a bit of a bull trap, right? Which is why we had that selling pressure. But again, looking at this parallel channel, well, it looks like that's where we're attempting to put in some support again. And if we come down to the bottom of that channel right here, that brings us right to the top of this wick from the fake out that we had during the ETF pump, right around $48,000 to $50,000. Again, an area of interest, right? And looking back at these pullbacks, you know, a lot of them are right in line with about 22%. You know, we have a 22 to 23%. We have the big ETF drawdown here, which is about 22% again. And currently, we fell down about 27. So that's like almost that 30% we're looking for. But where we are right now, around 22%. So again, excuse me, with Bitcoin being, you know, still a newer asset. Not everyone has fully moved on to accept Bitcoin ultimately as a hedge against inflation or, you know, a store of value. It's becoming that. I believe in time it will be the go-to, but it's still very young. It's only 15 years old, and most of these people are only really just got the ability to get in about 5 months ago. And a lot of these institutions are, you know, around that 6-month mark, you know, remember we said, are just starting to open up doors to that extra area of class coming in. So, you know, having a look at the DXY, you know, we have potential rates being cut this year. We have the presidential election, which is obviously very much I would say there's a lot of crypto talk this time. And right here, you're seeing that we're having another rejection of this downwards trend on the DXY, right? So here's something really simple I just want you to look at. So this is the monthly chart. I know you probably say you can't really deduce a lot of data from this, but I want you to just have a look at this, right? So this area is very, very important. And if you look right here, you know, people are saying, oh, well, we have this green monthly candle and it's lower than the past 4 months. That's a bad thing. Structure is changing. We're falling to the downside. But if you look, you know, these wicks and tails are quite equal from the top and the bottom right here. I mean, can you see this, you know, wick right here is very similar to this tail right here. This wick right here, very similar to this tail right here. So you could say that the buying and the selling pressure has been relatively equal over the past 4 months, right? Another thing we can look at is just the simple pattern. Now, I'm not saying it has to play out, but remember, if you're thinking that this right here is saying that this is the top and the markets are due for a correction, well, then that's what they were saying down here. And this actually stretched out longer than where we are right now. We had 2, 4, 6 going on 7 months, whereas we've only really been in our 5th month. So you could argue that we could have 2 more months of this and still have a scenario like we did here. And look at this pattern, right? We have green candle, green candle, 2 reds, followed by a green, and then a reversal. So we have green, red, red. Well, what do we have here? Green, red, red. This red was, as you can see, lower, right, than all 4 of these that you know came before it. And this red, even though we still have more of this month to go, is currently lower than this right here. So, you know, if you think that this should be the top, well, then you should have also thought that this should be the top because it's playing out very similar. Obviously not exactly the same, but very similar. So if we were to have something like this, we could have a potential red month for July, right? Move into August, put in a very small green month. You know, again, people are saying it wasn't enough move. It didn't engulf the candle. This is bearish. And then what happened? Boom, caught everybody off guard. And there it goes. And then all of the scared money sold here back between the ranges of 30 all the way down to 24,000, missing out on the gains up to 73,000. So, you know, again, guys, just where I see this market right now is kind of where we expected it to be. If you forget about the ETFs and you forget about everything else, the fact that we got a higher high before the halving, all the FUD that we've heard the China FUD, the Mt. Gox FUD, the FTX FUD. We've had so much fear, uncertainty, and doubt in the markets before. I just think this is another one of those moments, right? We got very excited. Price rallied insane. We had literally, 7 or almost 8 months of green, maybe more, I forget. It was just month after month after month after month after month of green, right? It was. And we got very accustomed to that. We thought that that was how it was going to continue. But we know that markets don't go up in a straight line, right? They ebb and they flow. They ebb and they flow. So until we start knocking out some of these crazy lows, okay, like falling and holding below 50,000 for a long period of time, then again, there's not much to be worried about. So I just wanted to make this video. I know it was a lot of talking today. Again, everyone's like, oh, K-Dub left the market. No, it's not. It has nothing to do with that, guys. It's just making videos every single day to just keep saying the same message over and over again. It's kind of a waste of time. So hopefully if you're out there and you're worried and you're freaking out, I mean, everything on the charts right now is suggesting that these are the opportunities for the pullbacks that you wait for. Could we go down to 50K? Yes, of course. But a lot of people are looking at those levels. And we notice that the wicks, they keep getting front run from the bottom, right? So every time you're waiting for these levels, it misses it just by a little bit, right? Actually, let me go back to, where did I have these right here? So if we go back to this right here, you could look that, we had, for example, the 0.618 at 37,837. And during that crash that we had this wick and the tail down here, that only came down to a low of 38.5. Excuse me. Oh, I'm sorry. I did the wrong. I'm looking at the wrong thing here. Yeah. So we had this area was 37.7, and this wick came down to about 38.4. Okay. So I'm sorry about that. So we had 37.7, 38.4. So that got front run. And if you come up in here and have a look at what we just did here, that level should have taken us down to about 47.8, and that only came down to about 53. too. So I think what's happening is everyone is looking at the same chart. They're hoping for these lower levels. They're looking at the Fibonacci's, human emotion. We're all looking at the same things. We're expecting the same things. But what's happening is we're not getting those opportunities, right? Just like everyone was calling for, these crazy levels, we never got to them. The same goes on the opposite side, right? These crazy low levels, we're probably not going to get those opportunities either, because Bitcoin it likes to punish people in both directions short term, but it definitely punishes the bears long term, right? So hopefully that kind of summarizes it up. Not telling you guys to buy. Hey, if you want to, sell, that's up to you. Do you. Be very careful in the altcoins. Allocate smaller capitals, 5%, because you only need 5%. If you allocate 5% and that 5% does 100x, well, now that's more than your entire portfolio, right? But Bitcoin is the guaranteed winner, and it has a track record that is undeniable. And really, that is the store of value that I believe will eventually be adopted worldwide. We're getting there. We're not there yet. But ultimately, guys, I think at that point, I'm just going to be rambling if I continue to talk anymore. So hopefully this kind of lets you know about what I see going on, why we're not seeing massive price appreciation compared to what we're seeing in the stock market. AI is a hot topic right now. And don't forget, you look at the S&P, and yeah, it's putting in highs, but it's really just like the top 7 that are attributing to that, right? It's not like the rest are doing, fantastic, right? Fly just flew on me. You see that, guys? So anyway, that is it for me. I love you guys. You're awesome. I haven't gone anywhere. Just, like everybody else, enjoy. It's summertime. Take a breather. Dollar cost average into Bitcoin. Do whatever you got to do. Not financial advice, but, I think you know where I stand on this situation when it comes to Bitcoin. So if you guys do want to learn how to trade, don't forget there are all these bonuses. There's $30,000 below. Now is a great time. If you want to learn to range trade, you can use paper accounts so you don't have to use your real Bitcoin. And you can check out my tutorials popping up right here, right now. I think when the markets start to pick up a little bit more, I'll do some other tutorials. It's just right now the viewership's a little bit lower, so I want to make sure that the majority of people actually see these educational videos, so we will be putting out a little bit more. I might not make an update until next week unless something spectacular happens, but the one thing that I will say is that the bears are starting to lose their steam. They really need to start pushing this price lower, because if they don't, I think that it's going to end up in the bulls' court. So that's it for me. You guys are awesome. Until next time, stay crypto, and of course, peace out.